Let's talk about the most unpopular but the most effective trading strategy. The trading strategy that's going to turn you into a profitable trader rather than a losing trader. Guys, for those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob. And it's Coffee with Rob, so we're going to have some coffee. Today, I'm just going to talk to you a little bit about strategy, the markets, and what the markets are all about. What I've found amongst everyone out there is you tend to believe that the squiggly lines and the lines and the candles and the charts and that sort of thing are going to somehow make you rich. They're going to somehow make you money with the win rate. What you have to understand about a win rate, and all of you that know me know that my feeling on win rates, but what a win rate does for you. If you're a scalper, you'll need a win rate because you're scalping, but if you're scalping, you're probably going to lose. So let's not talk about that. But let's talk about a win rate. Let's say you have a system, you went on a course, you paid thousands of dollars for it, you got the system, you came home with a system, bully for you, you've got this new, entangled, wonderful system, and you start applying it, you start working with it, and you start losing money. You start wondering why. Because you've got a win rate of 8 out of 10, because that's what they promised you on the course. They promised you to have a win rate of 8 out of 10. You go back, and all logic tells you if I've got a win rate of 8 out of 10, I've got the edge over the market, so I must be making money, right? No, not right. You see, here's the problem. You go home, you start trading, you do win 8 trades out of 10, but those 8 trades out of 10 that you won with, guess what? You only won $10 on each trade. So you won $80. And on the 9th trade, guess what happened? You lost $1,000. Now ask yourself the question, why did that happen? Why am I $920 in loss when I've won 8 out of 10 trades? What's going on? Well, 8 out of 9 trades, in fact. Why am I losing? What's going on? You see, here's the problem. It seems easy. You do all the hard work and you're winning. And you won that trade, you won that trade, you won that trade with no plan, because obviously if you had a plan, you'd make more on your wins and lose less on your losses. But we'll get to that. We'll get to the strategy, because that's what we're here for. We want to talk about the strategy that's going to make you the money in the markets. And that's what I said I would talk to you about. So we're going to talk to you about the strategy that's going to make you the money. But I want to discuss this with you first. If you look at the trades and the way you trade those 8 trades and you trade passionately into those 8 trades, you eventually make $10 on each trade by working really hard to get it there. The minute you saw the profit, you clicked the button and you got out. What happened when you went into a loss is you didn't want to lose, because all that hard work that you've put in the last 8 trades is preventing you from getting out of the loss. So it goes $10 into loss, it goes $20 into loss, it goes $40 into loss, it goes $80 into loss. So what do? You go and dollar cost average in it, you double it up, you make it worse, you move the stop loss away, and so on. And you know where it goes. And eventually it just gets so bad that you have to get out. So you get out. And when you get out, what happens? It goes in your favor, or it would have gone in the first place. This is the crux of trading. And this is why you need a business plan. This is why you need a strategy. Now, I've got what's probably the simplest strategy known to mankind. It's stupid simple. It is the simplest thing that you could possibly get. You don't have to write a 20-page business plan. You don't even have to write this business plan down, guys, because it consists of maybe 3 parts. If you can't remember that, you probably shouldn't be trading, which brings me to the point, guys. Don't forget, trading is risky. And if you don't like losing money and you don't like risk, you probably shouldn't be trading. And while you're here, don't forget to go and join the members area so you get the trade of the day every single day and a few other perks, and subscribe. If you want a free Forex book, there is one in the description below. Now, back to the strategy. Why do we have a business plan and a strategy? Well, think for yourself. If you're going to go and open a shop on the high street, and you say to me, Rob, I'm going to go and open a shop. What shop are you going to open? Well, don't know. Just I want to open a shop. Well, perhaps if you knew you wanted to open a supermarket, that would help. It would help if you knew what kind of shop you're going to open. So that's part 1. And then How much of it are you going to sell? What kind of stuff are you going to sell? Are you going to need staff? How much stock are you going to need? Where's it going to be exactly? How's the location going to look? What's the shop windows going to? So many questions that come up when you want to start a business. Funny thing is, those questions don't come up when you want to start trading. When you want to start trading, you simply go, let's just start trading. Let's just start clicking buttons and see what happens. No, you need a plan. I'm going to give you my plan right here, right now, very easy. And for those of you who know my plan already, listen to it again because you need to know what the plan is. So many of you still are unable to separate the charts from the plan because it's two different things. The charts give you the high probability trade. The charts give you the ability to manage your risk, and they give you that comfortable feeling when you take your trade. What they don't do is they don't give you the ability to win. That comes with a strategy. The strategy gives you the ability to win. So what is the strategy? To start with, what I always relate it to the coin toss. The coin toss is, if I was to toss a coin 10 times, in all likelihood, it would land on tails 5 times, it'll land on heads 5 times. You'll agree with me. If I was to tell you that I'm going to give you 2 for every one that lands on tails and take away 1 for every one that lands on heads, you would take that. I don't know anyone who wouldn't choose that trade because the odds are in your favor. So that's the basis of the principle, and that's the easy part of the principle. The difficult part is getting your mind around this, because what you have to do is take your account size. Now, let's say your account size is $25,000. It's a good account size. It's a fair account size. Don't let it grow. Just keep it at $25,000. If you make money on the account, take the money out, put it somewhere safe, and leave the $25,000 account there. Now you decide, I'm going to risk 1% on my account on every single trade. You see, the number one thing that this does, if I risk 1% on every single trade, you can risk whatever amount you like. I just feel that 1% works for me, because if I risk 1% on every single trade and I take 10 trades and I lose all 10 trades, because it doesn't matter if you've been trading for 33 years, guess what? You could lose 10 trades. It just is what it is. That's the nature of the market. You lose some, you win some. You've got to learn how to lose. You've got to learn that you're going to lose. But if I was to lose the 10 trades in a row, I would only lose 10% of my account, which is completely recoverable. I can get that back one way or another. Sometimes it'll only take 1 or 2 trades to get all that money back. Get it? It's about making more on your wins, losing less on your losses. So now I've chosen a 1% risk on every single trade. How do I apply that? Because every single stop loss is different. Every single stop loss. There's no way that I can keep the stop losses the same, is there? Well, there is. All you do is every single trade that you choose on whichever instrument, and by the way, don't just trade one instrument, trade everything, because the strategy is the same on everything. I'd trade orange peels if you said they were tradable. Now all you got to do is work out where's my stop loss going to be on this particular instrument? Where do I want my stop loss? And then you say, well, I'll tell you what, I'll put my stop loss there, because if my stop loss there, this trade's completely invalid. Now you've chosen the area of the stop loss. Now all you do is you work out how many lots, how many pips, whatever the points, whatever the case, it is back to my cost to that stop loss for $250. Now I've worked it out. Now I've worked out the size of my trade. It might be 0.2 lots. It might be 0.4 lots. Who knows? You've worked out the size of your trade. Now you just got to check that there's a reward that comes with that, because you don't want to be making $50 for a risk of $250. So there's got to be a reward, because you've worked out the size of your stop loss. And if the size of your stop loss is this big and the size of your profits this big, it's not going to work, is it? It's not going to work. You don't want to be making $50 for losing $250. All you got to do now is work out, if I look at this high probability trade, if I look at this chart, would I say that I can make more than $250 on this trade? Preferably 500 or 400 or 1,000 or whatever the case. And then if that is possible, if that looks like a clear possibility, and you're patient enough to wait the trade out, then you're going to take that trade. And there you have a trade with a good risk to reward on it. It's not complicated. You see, the market's 50-50, the market being the squiggly lines. If I look at a chart, whether I've got a system on it, whether I've got moving averages on it, whether I've got a Fibonacci on it, or whether I'm just using price action or trend lines, or support and resistance, supply and demand, doesn't matter. I look at a chart and I choose a trade, no matter what my system, no matter what trade I'm taking, that trade is 50-50. And the reason for that is because I'm trading against other human beings in the market. And other human beings have got a different point of view to me, and that's the only way the market becomes efficient. Because if everybody was right, the market would be inefficient. It wouldn't work. It would fail. It would land up on a zero. You need the market to be 50-50 for it to be efficient, for it to work out. Your strategy is not 50-50. Your strategy is giving you an edge. You're making more on your wins. But your system is 50-50 when you take a trade. So in other words, if there was no system whatsoever on the lines, if there was nothing on there to tell you which way to take the trade, wouldn't matter in the slightest. Because when you take the trade, you got the same odds as when you take the trade with your system. But no, you are going to feel a hell of a lot better if you take the trade based on some kind of system that you've learned that tells you you've got some kind of high probability of winning. That's the point. But what the system does do for you, it gives you the ability to manage risk. Guys, price action, candles, moving averages, they're not going to make you money in the markets. They don't win you trades. As I've told you before, they give you the comfort of being able to manage your risk. It's been very difficult to try and get people to believe in this, to understand this, or to get their minds around it. And the main reason for that is because so many of you go on these courses and they teach you the market terminology, they teach you who created the stock market, they teach you about the system that they've got that's going to give you this insane win rate, and they go over and over and over on it, and they push on it, and you do a demo and you win on that demo because there's no psychology in a demo. And then you go home and you start losing and you just can't figure out why. You see, embedded in our systems is an insane amount of fear. And the fear of losing everything financially is really, really, really bad. It's incredible, actually. What I would say to you guys, keep it simple. Don't get overcomplicated on the charts. Don't go mad. Don't look for stuff that isn't there. Don't put a million lines on your chart. Don't confuse your stuff. Don't start trading against yourself. That's what happens, is you put millions of lines on the charts, and then you find yourself trading against yourself. You find yourself questioning your own trades. That alone should actually tell you what the markets are 50-50. That alone should tell you that there's something not perfect about the systems as such. You see, when I started trading, we started trading with pens and pencils. We actually didn't use computers. We didn't have computers. We didn't have algorithms. We didn't have all these fancy mathematical equations. We just had what we had. I mean, we had some charts. We drew lines on them. If it was above the line we bought, it was below the line we sold. There was nothing too complicated about it. It was simple. And then we started overcomplicating this over the years. Over the years, we got more and more and more complicated. Eventually, I looked at my charts on a computer and said, how do I even trade this? There's just so much stuff on here. So many things to see. And the chart had become this small and everything around it was like this. All those things at the bottom, all those lines. You can't even see the chart anymore. That's where you've lost it. You've lost the plot. Take it all off, clean it up, make it fresh, start again. I don't say chase strategies. Just be careful of the cycle of doom. Don't have a strategy and then it starts losing, go look for a new strategy, or tweak that strategy and it starts losing, and then you go and tweak that strategy or look for a new strategy and that starts losing. It goes around in an ever-ending cycle of doom. No, stick to a strategy But stick to one strategy, not 15, not 20 strategies. You can apply a few things in the background to give you confidence and make you feel better, of course. I myself, I use support and resistance. I add in a few trend lines. I look at supply and demand, and I look at gaps and things like that. But do I draw lines all over my charts? No. Keep it simple, keep it straightforward. You know, most of the pro traders out there, if you go and look at them, a lot of them will only use an RSI, a relative strength index. They'll have a relative strength index. Oh, this share's overbought. I think I'll sell it. Oh, this share's oversold. I think I'll buy it. That's about as complicated as their system gets in many cases. Think about that. If they're keeping it so simple, why are you getting so technically complicated about everything? I've seen even new startup guys who've just started out, asking me questions in such a complicated way because they've been taught all of this terminology and there's all this complicated jargon in the question. And I think to myself, you've snowed your brain over with all this complicated jargon before you've even started, before you've even moved. You asking me questions. You're a beginner. You're asking me questions and you're asking me with all this complicated jargon in there, and I'm thinking to myself, well, I don't know how you're gonna get around this, but forget about all that stuff and go back to basics. Keep it simple. And one thing they don't teach you on the courses is how to make money. They teach you how to read a chart, they teach you how to use a system, but they don't teach you the strategy and they don't teach you how to make money. Guys, I hope that helps. I hope you enjoyed the chat today. Today was no charts and all that sort of thing, just a little chat between me, you, and a little bit about strategy. I'm trying to get over to you guys that the strategy is different from the charts. I want to thank you guys for watching me today. Don't forget to subscribe. I do forget to ask that. So don't forget to subscribe, join the members area, and tell you what, walk on still waters. Keep your feet on the ground, reach for the sky, and I'll see you soon. Cheers, ciao, and bye.